Good afternoon, everyone. Welcome to Vancouver Financial Network. My name is Ali Safi. Thank you all for tuning in. Today is February 14, 2021. Happy Valentine's Day, guys. All right, so let's go to chart, see what chart tells us. That was one of the very volatile week in the months of the February, and we still have lots of volatility into the market down the road. However, we are providing some very fun stuff for you guys today. We are getting to technical analysis for S&P 500, but we just changed the style a little bit for this analysis, and we are going to review some of the charts, some of the indexes compared to each other, see where are we at in the overall and big picture in our economy. So it gives us like a fundamental plus technical data as we are getting to the charts. I don't want to wait you more. Let's go to chart, see what chart tells us. All right, so this is S&P 500 weekly chart, and as you see, we are in a above this, like we are breaking above this big megaphone chart just last week, and we just continue 2 weeks ago and just continue another week. But here is a small megaphone again just forming, as we have another one here. Just as I want to point out, these ones are kind of showing weakness when we are getting to, actually this is not a megaphone, but it works to look at it this way. This is kind of like a range, but when we are getting to these type of patterns on the top, means that market is getting toppy and it's getting sloppy, means that volatility is gonna be a trade here. So we have like higher high and then we have lower low. So I just want to tell you guys how volatile that market can be. But if you go to daily chart, I want to show you some interesting thing. Just prepare it for you. Let me just clean this moving averages here. All right, so here is 2000. Let me just adjust it a little bit. That's okay. That's enough. This is 2019 months of like August, July. We are getting to very choppy market, and then in September we are hitting the high, and then going back down to October, and October we are getting high again. This is very nice consolidation. We break through and we are just trading in this uptrend channel all the way up before February 2020, and that was like a big crash happened last year. Everyone knows about that. But here is the pattern, and here is the similarity that I want to point out. Here is very nice triangle here, and as soon as we break above this, we are trading into uptrend channel. And after this big crash in March last year, we had like a bottom here. We're going high and then coming back, and then here is like a September high going back down, end of the September going back up, October, and this pattern is kind of like a small scale but very volatile of this pattern. Now after that we have like this channel going above, uptrend channel, and we are kind of going uptrend channel above. So are we gonna see like this pattern, and then it's gonna be fall all the way down to here, probably somewhere here, like a scale, some scale, like something like that? I don't know. Probably it's gonna fail. I'm not predicting we have the same thing happening here. It may happen. I don't know again, but this similarity, this symmetry gives me like a kind of warning sign at least. And I believe we have second scenario, and second scenario is gonna be like that. I just want to focus here on this chart. So if we have seen, okay, before getting to the second scenario, I want to show you something. I've seen like a couple of people in their analysis, they're pointing out this high and this is higher high. So we are getting just shake out this trending channel here. And here is high, we are just shaking out this trend channel like this exactly, and we are getting to another high. And this is very similar action. And we are on top of the market, and probably we roll out, we roll over like crazy, like a March low, going down there. Probably we are going something like here. I don't know, something like 3,000 or something like that. I wouldn't say it's not gonna happen. I have still my short position. It's pretty close to my stop loss level. I don't know, probably I would be stopped out or not. I'm into volatility play. Even if I stopped at the S&P shorts, I'm getting like I'm making money in VIX because I have like a VIX call option, VIX volatility index. I just traded about it. But I want to say something else. We had the same formation here and here. Look at the RSI. RSI was in overbought here, and then coming down to another low, another high, but this is like a lower high, but price is going like this is very normal divergence, right? So this is very normal divergence. But here in RSI, we don't have the same situation. That's what I'm saying. Here is, we have high, but we don't have like a sharp divergence like here, like we had last year. So we don't have like RSI overbought here. RSI is kind of like a ranging from beginning of the November. It's kind of like a ranging. Market is going higher. This is like a very slightly divergence, you can call it, but it is not a sharp divergence. And any like a pullback, it's gonna just fail the divergence and it's gonna reset the system. However, we are not in the same shape as per RSI and divergence. All right, so probably price action we are kind of the same, but indicator wise we are not the same. Also, if you look at this here, I want to show you the second scenario. The second scenario is going to be like this. So we have high here, we just going like another high and consolidation here, and we are breaking above this resistance line here. As soon as we are getting resistance line, we are getting like a parabolic move, and then after parabolic move we are getting to like all-time high, and then coming back down sharply, like a 10% correction from here to here. It was like a 35 57 or something like that, but we are getting to like a 32 12, and this is like a sharp correction of more than 10%, and we are getting again like touch this line, we are just slammed down here and then trading higher. And as soon as we get this line or get this line here, we have like a correction, like a multi-days correction. And then here, this type of price action is kind of the same. I don't know if we are getting like on Tuesday session, we are getting down like a very sharp correction or like very light correction. But I'm gonna say, even if we break above this line, we have tons of resistance lines here. So these are my calculations, like based on different methods, but I come up with these numbers, and they are very strong, guys. They are very strong resistance levels. Let's review this. We have like a 39.56 just above this resistance line. So if we are getting above this, probably we get shadow here and then coming back down. I don't know. Or even if we close above this, next level is going to be 4,004, and next level is going to be 4,033, and next level is going to be 4,063. Next level is going to be 4,100. Next level is going to be 4,147. So they're pretty close to each other. It is not wide. I know we are at all-time high and there is no roof above us, but I don't believe so. There are lots of roofs above us, and they're very tight to each other, and they're pretty close to each other. So when we are getting to the long position, just want to be careful, guys. If you want to get, I have tons of long position in different stocks. but I'm kind of like trailing the stop, and I'm very careful. If we are getting like to the sharp correction, I wedge myself with VXX, with VX, with VIX, which is like a volatility index, and also I have like a call option on volatility index and also call option on VXX. So I kind of like hedge myself. But I want to say, even if we breaking above, I have like lots of stocks in my portfolio that I can just cover myself. It's the time to be cautious and it's the time to be alert. However, I don't think we are getting to like a top formation right now. We still have like lots of rooms to going higher. Probably the top of the market will happen after April, May, June. I don't know. May is gonna be like a kind of a month that I'm getting like most of my position probably will be on short side. But till then we have like lots of times. We can't predict the market from now, but based on the cycle analysis, I'm getting to like May is gonna be like kind of a dangerous month for the stock market. All right, so this is kind of a level that I'm thinking we are getting to the next moves to the upside. As you see, it is pretty clean chart. I don't want to just make a messy chart for you guys, but this clean picture gives you like where are we at and where are we heading to. And probably we are going to the higher, probably we are starting another parabolic move. But as soon as we are getting above this and getting to a parabolic moves, all of those levels are going to be very important for just taking your profit off the table and just book your profit and make sure that trail your stop or put your stop loss at break even. All right. Okay, so let's go to different charts that I prepared for you, which are very fundamental technical charts I want to just discuss in a bit. By the way, if you like this video so far, please give us thumbs up and go to our channel, subscribe in our channel, and hit the ring on bottom, and it gives you like notification when we upload any videos. That's gonna help us and that's gonna support us for next videos as well. Here is a very interesting chart. This is S&P 500 compared to gold, and this is like a monthly chart. So I just want to go over with you with this chart. And as you see here, from 1971, when they took dollar off the gold by President Nixon, exactly 1974, you will see a gold price. This means gold price goes higher, a lot goes higher compared to stock market. Means that everyone is piling money into gold and just take profit of their stock, and stock market didn't do well compared to gold price, and gold price is going from 40 something like to, I don't know, probably 200 or something like that, which is getting like a 5 times more than stock market in just 10 days, in 10 years, sorry, and not to 10 days, 10 years. And then it found it bottom here like February 18 or like a January 80, which was like stock market again found itself, which was Reagan was the president of the United States, and he just dumped lots of money into the market. And look at that, stock market performed fantastic all the way up to 2001, which was like a dot-com bubble. So from 1980 to 2000, stock market performed very better than gold price. And whoever has like a gold, he just he didn't do well, like he or she, I mean, like didn't do well. And for those ones who had money into stock market performed fantastic and going higher. And 2000 to 2001, stock market just crashed like a dot-com bubble, goes down all the way down, and gold price again starts shining. And doing better and performing better compared to stock market, and find itself at 2011, which was like a gold price almost like 1900, and the stock market was like just did a small recovery after Great Recession in 2008 2009. So that was kind of the scenario, and right now we are getting to another stage, which was stock market after 2011 had better performance compared to gold. Even gold, it was here 1900. Just imagine 1900 was here, and right now gold is around like 1830, 1840, which is even less price than gold price in 2011. But what happened to the stock market? Stock market almost get like a 5 times more value rather than gold. So for those ones who have like gold here, they just hammered and their money actually got devalued, but the stock market goes higher and higher. And right now we are getting to kind of interesting situation, and this is like kind of pivotal point here. That's what I'm pointing out. I put this chart in my channel, like it is Vancouver Financial Network in Telegram platform. If you have it, go there and subscribe to our channel. We will provide you lots of materials. If you're not, just do it. Just go there. It's free, and it's like everything is there. Anyway, so if you're getting back to here, so we have this move going to kind of testing another one here, probably months of like April. In April, March, we are getting to parabolic move probably to the gold price, I think. But after April, March, gold price is going another leg down to here, probably to this level area. And when we are getting to this level of area, I think we are getting to another time to buying gold again. Right now, gold to stock market, or I should say stock market compared to gold, we are getting to like another leg down for gold, and we may think gold is gonna come back after hitting this price. So to be clear, stock market can go higher if we break above this line, and it is better for you to keep money in stock market rather than gold, because gold is gonna devalue when we break this line. So look at this chart, see where you should put your money. If you want to put your money into gold, make sure that you are below this line, because gold is gonna perform better. But if we above this line, if you're getting above this line, stock market is performing better. And if you have gold, then gold is gonna be like devalued compared to stock market. All right, so this chart is very, very important, and it is not financial advice. I'm just telling you exactly where money is going based on the technical analysis and based on the comparison between these two simple chart, right? Another interesting chart is gonna be next slide. Let me just be with me. All right, another interesting chart is NDX or NASDAQ compared to Russell 2000 chart. If you know, NASDAQ represents tech companies like all Facebook, Apple, all big giant techs are gonna be in NASDAQ, and that's gonna move NASDAQ price all above higher to the higher price. And Russell 2000 represents small companies, small cap in the United States. And during COVID, as you know, all the tech companies, because people are staying at home, and they just do online stuff, and you can see like Amazon, Apple, Facebook, like I don't know, any online digital companies are getting like a have better performance rather than restaurants, rather than retails, because they're hammered, huh? They're closed. Like look at the hotels, look at the all the small caps, like small companies, they're just they got hammered just because they are closed. They can't sell anything. When you have like small grocery around your area and it is like it is closed just because no one's going out, but everyone's offering online through Amazon, Alibaba, or something like that, just because even food, like those companies are making money just because they're transferring, not transferring, they're just delivering food to people through online application, right? So it is very normal to see Russell 2000 had like a very, very bad performance. And here is the chart. All right. So 1990, starting 1995, we are seeing like a tech companies are going higher and higher and higher, and they had like a better performance rather than small cap companies, right? So Microsoft, like Intel, like I don't know, IBM, those companies actually are going skyrocketing. And this is like a monthly chart, guys. This is not one day or daily or weekly. This is monthly. So just imagine after like 2 years, stock price from here to here, compare, look at that. For those ones who have like money in the stock market in NASDAQ compared to those ones who have like money in Russell 2000, look at that, how much money they can make. But there is a strong but. After March 2000, market rolled over and dot-com bubble just burst. And when dot-com bubble burst, all those tech companies just falling down, crazy falling down. But what happened to the restaurants, to the local restaurants? Nothing, huh? They just got better and performed better. They just do their stuff. They didn't got any impact from like a NASDAQ, because they had like their clients every day. They're just working, and even they have like a better delivery, food delivery, or like a better service to their customers, huh? So small caps were doing better compared to NASDAQ almost for 6 years. Almost for 6 years. And after that, again, NASDAQ starts picking up through this channel compared to Russell. And then here in November 2019, this breaks above this line, and November 2019 and then 2000, like just imagine COVID came February 2020, and here's the parabolic move all the way up to here. And look at that, we are just getting to the top, to the dot-com bubble. And look what happened after that. Like it's been like, I don't know, after September high, we have seen small caps are doing better. It means that NASDAQ is not doing well, and small caps are doing better, and it is going like if you see Russell 2000 starts doing well and performing better compared to NASDAQ, and Russell is going higher and higher. When Russell is going higher and higher compared to NASDAQ, this means that this chart is going down. Where are we at? Like where we can say the correction is due, I believe we have another stop here. We may see a bounce here probably in this area, and we are getting like a close to the Russell bubble, because if you see Russell 2000 chart is going a higher parabolic and blastic move. I'm gonna show you a monthly chart for the Russell 2000, and you will see this chart is very, very parabolic move. Let's go to Russell 2000. I want to show you Russell 2000. All right, so here is Russell 2000 chart. Look at that. This is monthly chart, and here is March low, and then for fourth consecutive month, we are seeing Russell 2000 is going to the roof. Like we are at a 2293. Now still there is no shadow. There is no shadow. But as I said, we are getting close to the end of the Russell 2000 run, and it doesn't mean that NASDAQ is doing or having better performance. I don't know, but we can see NASDAQ is just doing like a sloppy and choppy as it does like for most of the month from like October. Look at the Amazon, look at Apple, they're just barely getting to the new all-time high. Amazon actually didn't have like a new all-time high after September high, but Russell 2000, all companies actually are going higher and higher, and now we are getting close to the end of the euphoria for Russell 2000. How can I say? I can say based on this chart. Here is the chart again compared to Nasdaq, and as you see, the price actually is going higher and higher for Russell 2000 compared to Nasdaq. This chart is going down, but here for next 2 months, probably next 2-3 months, we will have like a very nice support here around this area, and when we are getting to this support, we may see a bounce here, or we kind of see like a Nasdaq can do better compared to Russell 2000. So this is pretty interesting, and I just want to bring you brought your attention here. This chart gives us like a fundamental idea about how money is going from sector to another, and we can just estimate and forecast the future of the market and which sector we should plan to go with and which sector we shouldn't go. Like here, you shouldn't go to the Nasdaq stocks. It's not doing well, but as you see, like here is the hanging man and the confirmation. With this top, we are getting to the Russell 2000 long, and we can make money out of it. All right, so have a wonderful Valentine, guys. See you on the chart next week. Bye bye.